Good day. You have probably received a letter from BDO describing or trying to describe how you're going to be using your family trust and some requests for information before the end of the year.
I'm George Doobie, saving the world from tax, one bow tie at a time.
We're going to try and go through this with a little bit of an explanation. So we know in prior years there's been a little bit of confusion. So we're going to hope to perhaps not eliminate, but remove some of that. And one, to address the requirements of operating a trust. And then secondly, as well, to go through some new rules that have been pending for a period of time and now are being implemented. So we'll start off with exactly what types of trusts are being required to file. And here we're going to work with one, a discretionary family trust, which many of you receiving the letter, this is how the whole thing started because we're aware you've got a discretionary family trust. What will be new this year for everyone is the requirement to file for a bear trust. And we're going to go through a bit of detail here in terms of what that is. But again, the letters that we're sending out, there's a fair bit of detail in there to go through. And I encourage you, please, please, please take the time to do this so that we're able to get the information from you by what I'm going to call the early portion of mid-December. As you can appreciate, our team will not be around nearly as much in the latter half of the month. So the more we can get into place now, the easier this is going to be. And we'll have evidence that you have done the correct steps prior to December 31st. In terms of what a bear trust is, so in many cases, this is going to be specific for real estate investors. But if you're not a real estate investor, don't tune out. There's still parts that are applicable to you. So for a bear trust, as a real general comment, not a legal definition, we can think of the bear trust as holding title to the property, and this could be an individual or an entity, for somebody else. And this may be triggered or applicable where there is a joint venture. So often we'll see joint ventures done where one individual will be listed on title or land registry, for example, and they're holding perhaps 50% for themselves and perhaps 50% for a corporation or another individual or group of individuals. And now we have a bear trust, whether you know it or not. Another example of a bear trust, which will catch people off guard, will be where you may be holding title or you may be listed as an account holder for an investment portfolio or a bank account for your parents, as an example. We've seen, and this is again a non-real estate example, and I see a lot in the healthcare industry, although in theory it's applicable to various industries, where minor children may be given often special shares of a corporation, but as minor children, they're not allowed to have legal title or ownership. And so a parent often is going to have or hold those shares as a bear trustee on behalf of the minor child. And that would be where a formal trust has not been created. And I'm not recommending that, by the way, just to note that it has been done, and I do frequently would be the wrong word, but it's not out of the ordinary to see. And again, this may be an example that you don't normally think of and trigger why you may have a tax filing requirement this year. They're often used as well in transferring real estate where maybe an entity hasn't been created quite yet, and we are looking to put that into place, but we're doing so through bear trust agreements until everything can be formalized. So again, there's a variety of examples where the bear trust may be in existence, and it's going to be applicable to a lot more people now, these trust rules, than ever have been snagged before. In terms then of the duties of the trustees, there's going to be requirements to essentially ensure everything's running along and being formally addressed by Revenue Canada. And we're taking more and more efforts to ensure that this is done in acknowledgement that Revenue Canada is spending more time auditing and taking a look at the family trusts and bear trusts. And because of the new legislation, I expect there's going to be a lot more attention to this in the upcoming few years. And so far better to be prepared for it and ensure we're not on the wrong side of the rules. So you can see from the slide, essentially, some of the duties of the trustees will be effectively ensuring that income from the trust has been either paid or payable to a beneficiary, and whether that beneficiary is an individual or a corporation. And the reason we normally want to see this is completed and completed correctly is that if we've moved money to that family trust, if the money stays in the family trust, it's going to be taxed at a maximum personal tax bracket rate. Whereas if we can ensure that it's been paid out prior to December 31st or is payable by December 31st, then the recipient is going to be responsible for the taxes, which is normally what we're looking to accomplish. So in terms of what it means to be paid, that's probably relatively obvious. What it means to be payable is a little bit different. And here there's a combination, if you will, of tax and legal rules that come into play, indicating when this is going to be payable. Often we can't pay something prior to December 31st, in that we may not even know what the number is that's going to be ultimately found to be taxable and passed along to a beneficiary. So it's not that we're trying to retroactively tax plan, it's that we don't know precisely what the number is. And so Revenue Canada will accept that we can identify for them percentages to be allocated. So for example, if there are 4 beneficiaries to a family trust, and we identify that person A and person C are going to get 50% each, just as an example, great, we're off to the races. In terms of the bear trust, this is much easier in that the bear trust itself isn't responsible for the income, etc. Typically speaking, it's not technically going through the trust, and we're identifying the fact that just that the existence of the relationship is there. In terms then of going back to when it's paid, or sorry, payable, Revenue Canada and apparently from a legal perspective are looking to, one, ensure that the amount in, as I look at my notes here, that the income is going to be paid. The trustees have exercised their discretion in terms of who is going to get what. So we have a list per se for that. And then next, we're going to ensure that the trustees are issuing a promissory note for that and have documented that through resolutions. The promissory note itself may be done after December 31st, in that, again, we will not have precisely in most cases, the exact number that's going to be distributed, but the concept has to be there, and the resolution to say that there's been a meeting prior to December 31st for sure is technically required to be there. So more precisely, we've identified, if you will, 4 different items that are going to be listed here to identify, or not so much identify, well, I guess it is to identify for Revenue Canada that we followed these steps. And so first, it's to say that we're going to have that actual meeting prior to December 31st. And it's not that it needs to be a super duper formal meeting with 18 people in attendance and this, that, and the other thing, but certainly there needs to be a discussion and some notes taken for ease of simplicity. Next is to say the documents or that writing has to be there. And BDO has included for your reference some appendices that will help you or guide you through this process. And so you can see from what was emailed to you in Appendix A some specific details. Again, if you're not sure how to complete, please do reach out to us and we'll help you with that. But the first appendix, Appendix A, is to, as I said, identify who amongst the beneficiaries is going to receive what. And you'll see they're listed: interest income, dividend income, taxable capital gains, and other income. Often what we'll just see is somebody's going to say, Billy Bob is going to get 40% of everything and Betty Sue is going to get 60%, as a quick example. Yes, sometimes we break things down in terms of the 4 identified income streams there, but usually for most of our clients using the family trust, it's going to be dividend income. That said, where they're using what I call a bow tie trust, where they've got actual liquid investments, for example, within that trust, will have to be a little bit more detailed in terms of the distribution of income to the beneficiaries. At the bottom of the form, fairly self-evident, trustees are going to be listed and sign off that this is what they've agreed to prior to December 31st. Next step is really going to be related to Appendix B, and that's notifying the beneficiaries in writing of the fact that they're going to receive something. And I know this sounds super formal, et cetera, et cetera. Please, I don't make the rules. I just try to bend them as best as I can. And so here's one of those that far better off to follow the formal procedures again, send off a message, and we've included a sample in Appendix B of what that may look like. Key part to that is it's not that we've identified that you have to send it necessarily to everyone. It's to say we're supposed to send it to those people receiving a distribution. And you can see they're looking for the trustees as well to sign off that, hey, this is formal and this is what's happening. Lastly, we get to Appendix C. And with Appendix C, we are going to more specifically have resolutions for the trust, promissory note, etc., that the lawyers are going to be assisting with. We have included a sample, and please, 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 this is not specifically meant to replace any form whatsoever of legal advice. Please work with your lawyers, have them adjust or use their own as appropriate, but it's more there as a sample to say this in theory is something of the nature of what Revenue Canada is looking for to be able to move forward with the trust, if you will. So now that we've got some of these items listed here, what are we going to do next? And going through, well, one, BDO is going to require a variety of documentation from you, as we normally do each year, to prepare the trust returns, etc. And you can see from the letter that we've emailed you or the slide here some of the example materials. But essentially, we just need to know what the bookkeeping information is. So we're going to have presumably access to the financial statements and dividends that are distributed and intended, and with the tax plan for the year from your operating and investment companies. But you may have as well some miscellaneous items that we want to take a look at. And maybe I will flag in particular last year's notice of assessment. We definitely like to see that everything's been done properly and there's no contentious issues with Revenue Canada. And we will be forwarding people the engagement letter you're receiving, but as well the foreign reporting checklist to help ensure we haven't missed something that Revenue Canada as well needs disclosed, and significant penalties exist if we do not do that. Next up, we're going to be trying to identify, again, what are these new disclosures that are required from Revenue Canada. And here you can see a little bit of a list of information Revenue Canada is after. And we can debate till kingdom come whether or not this makes any sense and whether or not Revenue Canada already has the information, but there's no point in fighting it if we don't put this information down and identify for them. And clearly you can see some of the points here are meant to make it easier for Revenue Canada to audit scenarios that they think are being missed. The last bullet point in terms of jurisdiction is quite obvious for a tax person to say Revenue Canada wants to know whether there should be withholding tax, whether the trust is really resident in Canada, for example. There may be other residency issues. Please, let's jot these things down. This is new, and I appreciate it's not going to be something everybody likes, but give some thought as well to who those beneficiaries are. And I think this is one item that probably makes us the most nervous, in that often those beneficiaries will be or have listed future children, and we may not know that there was a child or grandchild that was born, for example. It also often has, but not always, other trusts and corporations that are in existence for you. And so we need to know everything that you have there. Or again, in theory, Revenue Canada can tag us for not correctly completing the forms, etc. And you may ask, well, what's the incentive to fill out the forms? Well, if Revenue Canada pushes it, certainly they have the ability to say, if it's not filed or incorrectly filed, there's a penalty that starts off at $25 a day, a minimum of $100, and it goes up to $2,500. Of more importance now is a penalty that says something to the effect of they can charge the greater of 5% of the assets of the trust, including a bare trust, or they can go down to, a greater of that and the $2,500. But regardless of which scenario you're at, it's going to be potentially financially painful. Now, that last penalty, in particular, that 5% number, Revenue Canada has to prove something called gross negligence. But again, as a shot off the bow, the auditors, I won't say routinely, but certainly far more routinely and regularly than 10, 15 years ago, alleged that. And so it's something I'm certainly expecting. So now all of a sudden you have a bare trust that holds $1 million property, or alternatively, you got shares of a corporation that's valued at $1 million. 5% is going to start adding up very, very quickly, particularly if Revenue Canada does an audit, say 3-4 years from now, and they've got the opportunity to audit 3 years at a time. And so that penalty would be on an annual basis. So again, please, 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 this is why we're treating this so seriously. So in terms of next steps, please, let's get that information into your accounting managers, partners at BDO, so that we can start that process. The returns themselves are still due 90 days after year end, meaning March 30th to 31st. But clearly we're trying to get as much possible done in the early part of that as compared to the latter part, where we're also trying to do personal tax returns. We have partnership deadlines, T4s, T5s, et cetera, et cetera, et cetera. And so the more we can front load, the better off we are. And we're very, very, very keen to get some of that information from you prior to December 31st, and when we can actually action it. So we're asking again for the early part of mid-December at the latest, please. Get us some of that information. We appreciate you're not sending the bank statements and things of that nature quite yet, but it's that allocation and those trustee responsibilities that we want to get a hold of. And if you have questions, please, as I said, reach out to your accounting manager, reach out to the partner, and we'll help get that clarified for you so that you're on the straight and narrow with Revenue Canada. Thanks for listening in, and hopefully this will provide a little bit of clarification in terms of why and what we're looking for from Revenue Canada and the trust. And so, yes, I appreciate it may seem a little bit painful this year because it's a new exercise for most people, but I think you'll find on a go-forward basis, it's relatively routine. It just doesn't seem routine the first year round, of course. Thank you.